Good evening, students. Good evening to all of you. So, students will proceed further now on our particular the assessment. Particular the next questions that we are going to discuss now would be on question number 29. This is the continuing part of what we have been discussing, students. Further. Good evening to all of you. So now, students, first of all, in fact, way back in the afternoon, there was one very terrible news of one of our faculty from the fraternity. I think Mohit Agarwal. In fact, I heard that while he is based out of Kolkata. Some of you may not be knowing about him. He is based out of Kolkata, and he was taking some session in Pune, and that was an unfortunate incident that there was a cardiac arrest, because of which, unfortunately, he could not see through it. So that was a very terrible news that came out in the afternoon, and I have not met him primarily, but I do know him for the reason through the his lectures which goes through in the YouTube or so. So that way I know him in that case, in that capacity. And what to say, students, he was younger than me as well. Primarily, I suppose he was 35, 36 years, quite younger to me as well. And also he has very small daughter and son. So my just heart goes out to his family. What a terrible situation that they would be in. And just pray to God. So first is to let his soul rest in peace. Obviously, in this case, soul wherever it would be could be worried about his family well-being and all. Same time, I just pray to the God to give the strength to their family to overcome this loss as soon as possible in their life, and let their children, family don't very difficult, but they just uh, come out, family do make something out of their own life and make their father proud. So that is what primarily I can just say about them. My just prayers goes to that family, just for the fact that this is such a terrible loss, and that at this particular age, nobody at least should die. Family at least at this particular age, which he has gone. And knowing the fact that he happens to be from our fraternity, the loss is a great loss, not only to his family but also to the CA students, because I do know he also was contributing immensely to the students fraternity through his YouTube lectures and all. So everyone today, primarily all the students across who are connected to him in one way or the other, definitely will be in a great pain, and I can be just part of that particular uh, army of his followers. That is what it is. It's very terrible news, but at the end of it, it is all God will. Nobody knows what the scheme which the God has, family, or the scheme that He prepares. Nobody can be above His writ. So His writ is above all of us. Man proposes, God disposes. Family. So at the end of it, we just have to be submissive. Anyway, students, on that note, primarily life is fragile. You don't know what could happen in the next moment. You may make a wonderful plans and all, but whatever it is there in front of you presently, whosoever are there with you presently in front of you, just live your life to the fullest. Love people around you to the best of your ability. Because tomorrow or the next moment we don't know we will be there or not. That is primarily what it is, and it's a very cruel game that we all are part of it. because we are all attached one way or the other through our emotions. But at one particular level, emotions, I don't know whether it plays or not, but this is how it goes with it. So it's very bad particular news. I was quite disturbed just because I could imagine those people who would be meeting him every day or so. What would have gone to him just to hear this news? So I was quite disturbed in the afternoon. Then I was just going through some of his videos or so. I happened to see some of his videos with his family and all. I just was like, what to say? This fate of life, end of the day. But just my prayer from my heart, primarily for their children, to his wife, and to his parents. Just give them the strength to bear this loss, especially to the children. Make something out of it so that they always will. I'm sure that they will. That's my wish, which goes for him and for them. So, students, on this note, yeah, that is right, Akib. That is what it is, Ram Kumar. So let's continue, students. We have already dealt with a significant particular part of the assessment, also the amendment part that I've discussed with all of you under section number 68 primarily. So 68 was a section which was being there in this context, and then there was 68 to 69D. The tax rate is very high in this case, 115 BBE, 78% is the tax rate. I told you about the two important aspect of the penalty. There could be two sections where the penalty can be imposed. One could be in section 271 AB, another could be in section 271 AC. So these are the two sections on which the penalty could be imposed in this case. So that is something that we all are aware of it. And then, students, one important which we discussed was the amendment of the Finance Act 2022. On the Finance Act 2022, students, which we have discussed in this context, was about the fact that now, what is the thumb rule, students? Now, the SSC who has received the money, the SSC who has received the amount, that particular SSC will also have to establish the source of the source. So first of all, he has to establish the source. And not only that, now he will be also have that additional burden to establish what? The source of the source. And that exactly what, students, the things are. Question 26 remaining. Okay, I'll do that. Let's look upon to this question 26. Question 26, students. Students, the assessment of Shubh Associates, a partnership firm for the assessment year 1819, was made under section 143.3 on 20th of August 2021. The assessing officer made two additions to the income of the SSC, which additions of rupees 4 lakhs under section 40 AIA due to non-furnishing of evidence of payment of TDS, and additions of rupees 5.5 lakhs on account of unexplained cash credit. So these are the two particular aspect which is there. So there is an addition. So cash credit is a real challenge because 68 is going to come and SSC is going to suffer. The SSC contested additions on account of unexplained cash credit in appeal to the Commissioner Appeals. The appeal was decided in February 2022 against the SSC. Unfortunate. On 12th of April 2022, the assessing officer issued On 12th of April 2022, the assessing officer issued a notice under section 142(1) calling upon Shubh Associates to file return of income for assessment year 21-22. In response to the said notice, the Shubh Associates furnish a return of loss and claim carry forward of business loss and unabsorbed depreciation in the return. Students, be careful on one important point, which is about this particular part of the section. This notice that you are talking about 142(1), I should tell you one important thing, that students, when you don't file the return of income within the due date of section 139 subsection 1, please pay attention on this important conceptual point. When you don't file the return of income within the due date of section 139 subsection 1, the assessing officer immediately thereafter can also give the notice of 142.1 as well. And that notice of 142.1 can require the assessee students to file what? The return of income for the relevant previous year. The return of income, students, for the relevant previous year. So that can be done in this context. So therefore, students, herein the notice can be given under 142.1 after the due date of 139.1, and that notice would require the assessee to file the return of income within the due date. Practically right now I find it very difficult for this particular students, this particular notice now, considering the fact that even the time limit for a belated return is very less now. Even the time limit for a belated return is very less now. And I think all of you may be aware of the fact that all the returns, whether it be the original return or whether it be a belated return, all the returns has to be filed by 31st of December of the relevant AY. All the returns has to be filed by 31st of December of the relevant AY. Nevertheless, whether the possibility of a notice under 142.1 after the due date of 139.1, can that exist? Answer is yes. Possibilities are there. The status of that return which is filed in response to the notice of 142.1, the status of that return, students, which is filed in response to the notice of 142.1 would definitely be a belated return. Why a belated return? Because this is the return which is filed after the due date of 139.1. Now, in this particular case, students, here there is a case of a return of loss that he has filed, and he claimed to carry forward a business loss and the unabsorbed depreciation. I think all of you may be aware of this point, that can a business loss and UAD, can that be carried forward in the case of a belated return? Answer is no. But answer is no in terms of a business loss cannot be carried forward if if the return is filed after the due date of section 139 subsection 1. But what about the UAD? Can the UAD be carried forward even if the return is filed after the due date of 139.1? Answer is yes. So you can definitely carry forward in this paragraph. The conclusion would be you can definitely carry forward the UAD, but you can never carry forward the business loss, because this return is any case a belated return. Shubh Associates, next paragraph, friends. Shubh Associates pays interest on loan at 14% to its partners. So Shubh Associates, students, is paying what? In this case, interest on loan at 14% to its partner Anil and Ajay from 1st of April 2021, being the date of loan, which amounts to 7 lakhs in total in the previous year 21-22. So we all are aware that maximum what could be allowed is 12% is a rate of interest which could be paid to the partners. That is the maximum. So from here, one conclusion is this, that 2% additional interest which is paid would be disallowed. The same was approved by modification of partnership deed with effect from 1st of June 2021. Why this is previous year this? With retrospective effect from 1st of April 2021. Anil, a non-resident, is working partner, but Ajay, who is resident in India, is not a working partner. Now, so far as interest is concerned, what about the interest part, students? Could it be given only to a working partner, or it could be given to both working as well as non-working partner? So interest payment by the partnership firm could be given to both working as well as non-working partner. But when it comes to a remuneration, then the remuneration can only be given to the working partner. Only be given means that deduction would be allowed only in the case of remuneration which is given to the working partner. So far as the non-working partner is concerned, completely it would be disallowed. Further, Shubh Associates furnish the following information pertaining to the installment paid to NBFC during the previous year 21-22 towards the loan borrowed for the business. NBFC students are also covered, if you be very careful, in 43B, which is now the payment of interest would be allowed as deduction if the deduction in respect of interest on the loan will be allowed on payment basis. That loan, students, primarily is to be taken either from a bank or from a financial institution or even from an NBFC. So 43B even regulates the deduction of interest from a loan which has been taken from the NBFC, from the loan students which has been taken from the NBFC. So that is one of the part, that component that you should always be careful about it. Thereafter, students, this is what it is in respect of various amount. The mode of payment is equally important. Why is it so? Because these cash payment in this context is would be any interest component. Now he is repaying what, students? Installment payment. We need to know how much in this installment constitute the interest amount. We need to know how much in this installment constitute the interest amount, because the loan repayment, any case, there is no deduction for that, but the interest out of that loan will be eligible for deduction. But if the interest is paid in cash, students, interest is paid to the cash, then we need to check this one out, students, very carefully. Okay, so we will have to see if any questions are being given in this regard or not. So students, on the basis of this fact, please tell what would be the answer. Let's take the first one. So students, all of you agree to this one? E is the answer. It can carry forward another depreciation, but cannot carry forward the business loss. Can Shubh and associate apply for rectification under section 154 or revision under section 264 with respect to the additions of 5.5 lakhs on account of the unexplained cash credit? Let's see what exactly it is. Now, students, this is one of the important concept which is going to get triggered right now. Just please understand it conceptually, because this is actually a very important concept. If you see over here, there are two additions which are being made. One is towards the default of TDS payment, on which the TDS default, on which there is a disallowance of 4 lakhs. And the second one was the additions, which is in respect of the cash credit. Now, he has filed an appeal with the CIT appeals in respect of the cash credit. Now, on that note, students, what we can say, the assessee wants on the same particular point, he wants to go for a rectification. He wants to go for what? A rectification under section 154. So rectification, he wants to do it under section 154. Therefore, the question is, can he do a rectification under 154? So that the outright answer is no. Reason being, students, there is a concept of a partial merger. What is this partial merger, students? That particular matter of an order which is made as a subject matter of an appeal, that portion of the order which is made as a subject matter of the appeal, order of whom? Order of the AO. That portion of the order of the AO which has been made as subject matter of an appeal, 154 says that that particular thing cannot be rectified. That particular thing cannot be rectified because the jurisdiction is merged with the appellate authority. So whatever now the appellate authority will decide, that is what would become final. So therefore, because the jurisdiction on that particular matter is with the appellate authority, so the rectification which the assessing officer wants to do through an application by Shubh Limited, that rectification cannot be done because that matter is already merged with the jurisdiction of whom? With the jurisdiction of the appellate authority. So therefore, you cannot touch that particular matter. So far as the other particular, students, 264 is concerned, they are talking about the revision by the CIT. Revision by whom? By the CIT. So far as the revision by the CIT under section 264 is concerned, students, the point is like this. Be careful. The point is like this, that 264 revision, see, against the AO's order. Once the AO passes the order, AO has passed the order, then primarily you want to challenge that order. The remedies which are being available, students, to you is the appeal remedy, appeal before the CIT appeals, appeal before the CIT appeals, or the remedy of revision, which is there under section 264, remedy of the revision, students, under section 264, or the remedy again of the rectification under section 154, the remedy of the rectification under section 154. So these are the various remedy, students, which is available in this regard. But one very peculiar part of 264 is this. 264 remedy, student, says this, that if you choose on even a single matter to go to appeal, 264 says what? If on any single matter, if you want to exercise the right of appeal, then in respect of the other matter also, you will not have the right to right of remedy under section 264. 264 remedy will then not be available to you if you have gone for any particular matter to file an appeal before whom? Before the CIT appeal. To file an appeal, students, before whom? Before the CIT appeal. Then in respect of the any other matter also, you will not be in a position to go to 264. Here in this particular case, the assessee, in respect of the same matter which has been taken in the appeal, in respect of the same matter, which matter was taken in the appeal? The addition towards the cash credit. The same matter which was being taken in the appeal, he wants to take the same matter before the CIT and 264. Can that revision remedy be available? Answer is no. Not only on that, even the assessee cannot go for the other matter, which is the additions of rupees 4 lakhs, which is on account of the disallowance under 40 IA. Even on that particular matter as well, the revision remedy under 264 is not available. But what about the rectification remedy under 154? On that particular matter, is it available for that 4 lakh additions? Answer is yes. So the point over here, students, is this, that there are two concepts which are very critical. One concept is known as the doctrine of partial merger, and the second concept, students, is known as the doctrine of complete merger. Partial merger, again, as the name suggests, that portion of the AO's order which has been taken in the appeal, that portion of the AO's order which has been taken in the appeal, on that particular matter, no particular jurisdiction could be exercised in respect of section 154. No particular jurisdiction can be exercised under section 260 154, which is your the rectification remedy. Under 154, you cannot exercise that jurisdiction. On the other matter, can you exercise the jurisdiction? Yes, but not on that matter. This is a partial merger. Complete merger says that if you choose to go with any one matter of the AO's order in the appeal, then in respect of the other matters, you will also not be eligible to take up the remedy under section 264. Now, therefore, the doctrine of partial merger are covered in two sections. One is section 154, which is about the rectification. 154, which is about the rectification, and 263, which is about the revision by the CIT. Revision by whom? By the CIT. So 263, revision by the CIT, primarily. 154, rectification by the income tax authority. 264, students, is all about the revision by whom? By the CIT in this particular case. So it is a complete merger. So partial merger allows you the other matter which you have not taken in the appeal, the other matter that you have not taken in the appeal, the partial merger allows you the 154 remedy or 263 situation. But a complete merger, which is 264, that will not even allow you to take up the other matter which may not have been taken in the appeal. Even on the other matter, you will lose the right of the remedy under section 264, and that is what the entire concept is all about. So here, students, obviously the answer is very clear. In respect of the same remedy which he has appealed, he wants to go for either 154 and 254. Is this remedy available to students? And the answer is no. And therefore, students, you can say that it can neither apply for revision before the commission under 264 nor the rectification under section 154. Both the remedy is not available. Okay. That is one important point. Read this one. We were doing this NBFC from the perspective of 43B, but actually now this is primarily for 269 SS and 269T. So that is what they are trying to target in this question. We were discussing in the context of 43B, but the question actually for that NBFC point is in respect of 269 assessed penalty and 269T default, in which case the penalty is going to be levied. So, so what exactly it is in this particular context? The situation, students, over here, if you all will see it very carefully, please have a look. Further, Shubh Associates furnished the following information pertaining to installment paid to NBFC during the previous year 21-22 towards the loan borrowed for business. So, in this context, students, they are talking about the penalty in this case on whom? On the NBFC. Very good question, students. This part of the question is really very good. So over here, if you all will see, students, in this particular context, over here, students, if you all will see in this particular context, what they are trying to suggest, students, so far as the banking company is concerned, the loan which you are receiving is like a consideration for them, because it's a banking company, non-banking financial institutions. So for a banking companies or the NBFC or the financial institution giving the loan or accepting the amount, these are the part of the turnover. This is a part of the turnover, students. And because it is a part of the turnover, students, in this particular context, because it is a part of the turnover in this particular context, therefore, when they are receiving the consideration amount, for them, the loan is a consideration amount. So therefore, if they are receiving the consideration, because for them, financial institution, banking company, NBFC, for them, this is like a consideration, and hence, if you receive a consideration of rupees more than rupees 2 lakhs, otherwise than by way of the prescribed banking mode, in that particular case, this would be considered as a default of section 269 ST, and if it is a default of section 269 ST, accordingly there would be a penalty under section 271 DA. Accordingly, students, there would be a penalty under section 271 DA. So this we have to see whether there is a default of 269 ST, whether the loan which is a consideration, was it being received in excess of rupees 2 lakhs. We need to check in this case. So these are the cases where the cash is involved. Beam is the prescribed banking channel, that is perfectly fine. So therefore, these are the various defaults which has taken place: 1, 2, 3, and 4. If you see the total of the same, 1,20,000, 2,40,000, thereafter 2,40,000 plus 50, 2,90,000, and finally plus 3 lakhs. In this case, 5,90,000 rupees. So 5,90,000 rupees is the amount of the loan which you have taken in this context, in this regard. So therefore, students, in this context, the answer, students, in this particular context, no, bank can receive Akib, NBFC can't. Bank can receive, but NBFC can't. So, students, answer would be C. Penalty leviable 5,90,000. The entire consideration amount that you have received, which is a default receipt, So entire consideration, students, that you have received, which is a default receipt, that entire consideration of the amount would be subject to the penalty. So it is not the excess amount. Students, please be careful. It is not the excess amount, but the entire consideration amount, students. Entire consideration amount would be attracting the penalty in this case. Would be attracting the penalty, students, in this case, and that exactly is the point over here in this regard. So students, this is how the things has to be looked upon in this context, and that exactly is the point. Now let's have a look, students, over here. Would tax required to be deducted at source on the payment of interest to Mr. Ajay and Anil, students? I think you should be aware of this particular part. Would tax be required, students, to be deducted in respect of the payment? Which payment that they have made? The payment of the interest. The payment of the interest, students. So therefore the question in this regard, the question, students, in this regard is whether the tax will it be required to be deducted in this case. Students, in section, this is interest other than securities 194A, and many of you may not be aware of the particular position of law, and the position of law is this, that interest which is paid other than the interest on securities, interest which is paid other than the interest on securities, the TDS under 194A at the rate of 10% is what has to be deducted. So if you are paying the interest on partner's capital or partner's loan, that interest payment also will fall under the category of 194A. That interest also would be falling under the category of 194A for the partnership firm, so as to decide whether it has to deduct the TDS or not. 194A is what the partnership firm will concern. However, there is an exemption which has been given in this context, and the exemption, students, as you all know, and the exemption, students, as you all know, would be that, suppose, I'm not aware that if you people are aware in this case, students, just have a look over here. In this particular context, just a second, let me confirm once. So students, one of the beautiful MCQ you can just see over here in this context, students. One of the beautiful MCQs. So what is the beauty of this MCQ, students? Be careful. The beauty of this MCQ lies on the fact that, please understand over here, there is one exemption under 194A. There is an exemption under section 194A. Yes, sir. Wherein the interest which is paid, by the firm to its partner, on that the TDS would be deducted. The interest which is paid by the firm to whom, to its partner, the TDS would be deducted. I hope that all of you are clear with this one. So that exemption is given. But at the same time, all of you will appreciate on the point that 194A is for a resident payee. 194A is for resident payee. So the exemption that we are talking about is also for the recipient partner who is receiving the interest. 194A is about the resident payee. So the exemption also would be to whom? To the resident partner who is receiving the interest. Who is the resident partner who is receiving the interest? It is Mr. Ajay, who is the resident partner who is receiving the interest. So therefore, the interest which is paid to Mr. Ajay, on that, the TDS under 194A will not be required to be deducted. But what about to the non-resident partner, students, Mr. Anil, to whom the interest is paid? On that, 194A is not applicable, because for that you need to then check 195. 195 is what would be the applicability, and under 195 there are no such exemptions which are available, and hence the conclusion will be that the TDS will be required to be deducted in respect of the interest which has been paid to Mr. Ajay, who is a resident partner, whereas the interest which is paid to Mr. Anil, who is a non-resident partner, on that the TDS will not be required to be deducted. One of the beautiful MCQ, students, which has been there. Indeed, one of the beautiful MCQ. So no tax is required to be deducted in respect of payment to Ajay primarily, but tax is required to be deducted in respect of payment to Anil. And the reason I have already have told to all of you in this case. Let's come to the next one. What is the amount of interest to be allowed while computing the business income of the firm for assessment at 22-23, assuming that TDS, if any, has been deducted and deposited on time? So the interest to be allowed while computing the business income of the firm. So students, how much interest would be allowed in this context? In this case, students, if you see very carefully, read this particular paragraph. This paragraph is what would be the real scenario over here. The interest is, this is the interest which has been paid in this regard. So now in this context, if you see it very carefully, we just want to focus on the allowability part. We just want to focus on the allowability part. Seven lakhs in total, students. These are the words which has to be carefully read in this context. The words has to be read very carefully. So Shubh Associates pays interest on loan at 14% to its partner Anil and Ajay from 1st April 2021, being the date of loan. That was the date of loan, which amounts to rupees 7 lakhs in total in previous year 21-22. The same was approved by modification of partnership deed on 1st of June 2021 with retrospective effect. Now students, in this particular context, now this which amounts to 7 lakhs in total. In this case, students, one thing is for sure. In this case, students, this 7 lakhs, if I just put across 12%, 12% students, in this scenario, 12%, but please understand it was approved from 1st of June. From 1st of June, students, if you see very carefully, so 2 months you have to remove, because since it is approved from 1st of June, only it will be allowed on prospective basis. The retrospective, it cannot be allowed. So it means that before 1st of June, it was not approved. So even if you have made a retrospective effect in the partnership deed, that the interest would be allowed with retrospective effect, the retrospective portion will never be allowed so far as 40B deduction is concerned. So deduction is always prospective, and therefore if it is approved from 1st of June, then from 1st of June only it will be considered. So in that particular case, the amount that turns up to be in this FIR takes 7 lakh, because I have just one particular query and confusion on this 7 lakh spot, into 10 divided by 12 comes to 70,000. Comes to 70,000. Okay, 7 lakhs. Students, if you read it now very carefully, 7 lakhs in this particular context, interest on loan it is 7 lakhs, students. Interest on loan is 7 lakhs. I was considering the loan itself as 7 lakhs. No, it is the interest on loan which is 7 lakhs. So interest on loan at 14% to its partner Anil and Ajay from 1st of April 2021 being the date of loan, which amounts to rupees 7 lakhs in total in the previous year 21-22. So accordingly, students, with 7 lakhs in total, students, in this context, herein, so this 7 lakhs, which is this 7 lakh, students, which has been there, how you are going to cover it up, students, in this case? 7 lakhs is not the loan. I was taking the loan particular part in this case as if it's a loan. Incorrect reading of the question, students. So 7 lakhs into herein, this is at 14%. So how much would be at 12%? So how much would be at 12%? So 14 into 12. So this 7 lakhs is at 14%. How much would be at 12? So cross multiplication. And then thereafter, students, for 10 months we have to do. For 10 months, students, we have to do. And accordingly, students, in this case, it would be 7 lakhs. 5 lakh, students. Answer is 5 lakhs. The answer is 5 lakhs. Answer has to be 5 lakhs, students. 7 lakhs into 12 divided by 14. Isn't it? And for how many months, students? For 10 months, because this is for the entire year. So therefore 10 by 12. 10 by 12, students. Okay, because the partnership deed was approved from 1st of June. Partnership deed, students, was approved from 1st of June. So from that date, so it means that April and May, these 2 months, the deduction would not be allowed. So what would be allowed finally would be for 10 months at 12% is what would be allowed. And 7 lakhs is for 12 months at 14%. 7 lakhs is at 7 lakhs is for 12 months for 14%, whereas what we require is the interest for 10 months at 12%. So interest at 12 for 10 months at 12%, because this 7 lakhs is at for 12 months at 14%. We require for 12 months, we require for 10 months at 12%, and therefore it becomes 5 lakhs. I hope that all of you are correct in this conceptual clarity. With that, students, in this particular context, let's see this particular case study again on the penalty part. Mittal Private Limited, M files a return of income in previous year 22-23 on 30th September 2023, declaring a loss of 18 lakhs. The rate of income tax applicable to the company is at 25%. Fine. The tax auditor of M, in his audit report submitted under Section 44AB, has reported a disallowance of 1,60,000 towards personal expenditure of directors, as no evidence produced by M in support of this expenditure. However, M did not disallow the same in its computation and return of income. The return of income was processed by the CPC, making the addition of rupees 1,60,000 towards the personal expenditure, and the loss was computed at 16,40,000 in that particular intimation of 143.1. After the disallowance, students, the loss, so original return was at 18 lakhs. Thereafter, the intimation was sent revising the loss claim at 16 lakhs 40,000, because this 1,60,000 which is there will not be allowed to you as deduction. Now the next particular paragraph, students, the return of income was selected for scrutiny assessment, and by order passed under 143, the loss as per the normal provision reduced to 12,20,000 by making the addition of 4,20,000. The assessment was reopened under 147, and by order under 147, the loss as per the order was converted. This is a simple question actually. So students, over here if you see 18 lakhs was 139.1. Thereafter, students, 143.1, it came down to 16 lakh 40,000. 16 lakh 40,000. 143.1, it came down to 16 lakh 40,000. And then thereafter, students, 143.3. Finally, students, it then thereafter was reduced to 12 lakh 12,000, 12 lakh 20,000, and then thereafter, students, 147 happened. So it got converted into an income of 2.2 lakhs. So this is a factual position. Students, in the morning class already I have told you this particular part, which was about the fact that from the loss from the return of income to any changes which is made in the intimation under 143.1, to any changes which is made in the intimation of 143.1, that changes will be considered as on account of an apparent mistake and not on account of an underreporting. That changes will be considered on account of an apparent mistake and not on account of an underreporting. It is only from that intimation to the order of assessment, whatever changes takes place, that could then be considered as what? As on account of underreporting. And from the assessment order of 143.3 to the assessment order of 147, in that case also we will say, students, we will say it would be a case of an underreporting. So in this particular case, students, if you see very carefully, what do we get over here in this context, students? 16,40,000 is where we need to start. 16,40,000, students, is where we need to start, and 143 is what we need to look upon it to it very carefully. So 16,40,000 and this 143, it is 12,20,000, and then thereafter 147, it is profit of 2.20 lakh. 2.20 lakh. Now, students, in the case of a loss return, whatever is the difference, in this case itself becomes a total income. And on that total income, you calculate the tax, and on that tax, you calculate the penalty. So therefore, for penalty computation of 270A, what they say that from loss to loss, whatever is the revision that has taken place, that would be considered as a total income, so that you can calculate a tax on that. And on that tax, thereafter, you will be calculating the amount of penalty. So the tax calculation is only meant for the purpose of computation of penalty. In actual sense, students, there is no such particular, there is no such particular what, students? Particular tax that the assessee has to pay. In actual sense, students, there is no such penalty, there is no such tax that the assessee has to pay. It is only for the purpose of the computation of penalty that we have to compute the tax amount. So the tax amount, students, the first particular thing that you will do would be from 6.4 to 12.2, because intimation to the assessment order. So from 16.4 to 12.2, students, in this particular case, the difference, as you can see over here, is how much, students? 4.2 lakhs. 4.2 lakhs, students. That is the point. isn't it? 4.2 lakhs. So 4.2 lakhs itself would be a total income. The tax would be 25% plus the HEC at 4%. So therefore, in this case, the tax 25% into HEC 4%. This comes to 1,09,200. 1,09,200. And on that, students, divide by what? Underreporting. Are they talking about? There is a. What is the question, by the way? We have not read the question at all. Let's read the question. Which of the following statement regarding penalty on addition of 1,60,000 towards personal expenditure is correct? The third one, students. The third one, students. Point 3 is correct. Because this is a case for this audit report, 1,60,000. This got added primarily because of that audit report observation, and that addition took place while sending the intimation of 143.1. And the addition took place while sending the intimation of 143.1. And therefore, students, in this case, it is point number D, which is the correct answer. Therefore, in this particular case, it is point number D, students, which is the correct answer, and that is how we have to consider it over here. That is how, students, we have to consider it over here. So D is the correct answer, students, in this context. Now, coming to this particular part, what is the penalty under 278A or is the consequence of 143 if the addition was not on account of misreporting? So already the tax amount we have calculated, students. Already tax amount we have calculated. Divide by 2, and if it is divided by 2, then the answer in this case is 54,600. 54,600 tax amount already we have calculated at, in this case, 109. 200 divided by 2, and this is what we will get it. And the next one, students, 270A at the time of passing of the order, considering that it is on account of misreporting. So students, over here, as you can see, from 12 lakh, so 12 lakh 20,000, 12 lakh 20,000, from that you, it has came to the income. It has came to, students, income, students, in this context. So therefore, in this regard, 2,20,000, which would be 14,40,000 in totality, 14,40,000, and on that the tax calculated at 25%. On 14,40,000, calculate tax at 25%, and the HEC at 4% will give you the tax amount of 374,400. HEC at 4%, then will give you tax into 200%. So into two times comes to 374,400 into 2, 748,800. 748,800. So that is how it would be considered in this context. Now, friends, so therefore you have calculated a tax till HEC, and thereafter, friends, you have added what? Added the in this case 2 times of the amount that of the tax that you have calculated, and this is how, students, you have arrived at the answer. This is how, students, you have arrived at the answer. And now let's look upon, students, in this context, the next particular proposition. So now question number 4 herein, assuming that the additions made in the order under 147 are not on account of misreporting. So it is not on account of misreporting, students. So what will happen in this context? So if it is not on account of misreporting, students, are not on account of misreporting of income, but only on account of underreporting, so it means 50%. So it is 50% of this amount. So 50% of 374,400 divided by 2. So that will be 187,200. Okay. So what they are saying, M seeks to claim immunity from imposition of penalty under 270A. He can do it. In the previous question that we did in the morning, there was a case of misreporting and he wanted to get the immunity. But here it is, if we are assuming it is not a case of a misreporting, it is a normal underreporting, Then students, after the order has been passed under 140s, after the order has been passed, students, thereafter students, within 30 days he will have to pay the tax along with interest, and he should not file the appeal, in that particular case, students, he will get the immunity from the penalty and the prosecution. So if you see over here, M seeks to claim immunity from imposition of penalty under 270A and the initiation of proceeding under 276C of the Act by filing an application in this regard before the AO. What are the other conditions that needs to be satisfied by M in this regard? So the other conditions, students, in this particular context, would we pay the tax and interest payable as per the order within the specified period, which is 30 days? Answer is yes. Pay the tax as per the order. No, only the order tax. No, I told always students in the morning also tax plus interest. So second is incorrect. Contest the addition made in the order after the payment of tax and interest within the period specified in the notice of demand. This is also an incorrect answer, students. This is also an incorrect answer. No appeal should be or should have been filed against the order. No appeal should be filed against this order. So even this is a correct answer. So therefore, students, in this particular context over here, so first and the fourth students is the correct answer, students, and therefore in this context, this is what it is. This is what it is. Okay, so you should not be filing an appeal. Now let's go to the next one. Out of the additions of 4,20,000 made by order passed under 143.3, an amount of 1,80,000 in account of a false entry deliberately made in M in its books of accounts. Apart from penalty under 270A, what are the other prosecution and penal consequence, if any, that would be attracted, students? This is a one point that you should be very careful about it. Students, there is 271 double AD, if you remember that false entry or the bogus entry that you pass in the books of accounts. False entry or the bogus entry that you pass in the books of accounts, then the assessee will be liable for penalty under 271 double AD, which is equal to the amount of the false entry. So the penalty is equal to the amount of the false entry. So any false entry or the bogus entry, if you do it in the books of accounts, then the amount of the penalty is equal to the false entry, and therefore in this case 271 double AD would be applicable. And because of this particular crime that you have committed, you would also be prosecuted under 276C. That is a standard provision, students. Just keep in mind the standard provision of 276C, which is of the prosecution. So in that case, students, 1,80,000 would be the 271 double AD. So this is the correct answer. Now let's have a look, students, in this context. The next particular amount. Students, let's have a look in this context. Read this question number 28. This provision, I suppose you may not be aware of this particular part. Students, this is actually one of the very important question. Please mark this one question. This is an important question. Students, this is about the question for non-filing of the return of income. This is a question about the non-filing of the return of income. So in the case of non-filing of the return of income, students, misreporting or underreporting, Akib, it's the same. Misreporting is deliberate. underreporting could be accidental. Means like, for example, a disallowance has happened in the main assessment. So my interpretation of law was wrong. Like for example, I'll tell you, I have claimed a depreciation considering that I'm eligible for depreciation claim. And who am I? I'm a lessee. So being a lessee, I have claimed a depreciation allowance. And therefore, I claimed it. I reduced my total income. Tax liability was calculated. The assessing officer, while he was doing the assessment, as we all know, the law is that it is the lessor who will be eligible for claiming the depreciation and not the lessee. So now in this context, what has happened is that the disallowance has taken place of the depreciation, and accordingly total income has been increased. So in this particular case, there could be a case of an underreporting because a wrong claim has been made in this regard. So that is what it is. Now this wrong claim could be on account of, say, a wrong interpretation of law. That is one thing which has been there. So that is a particular position which has been there, wherein a wrong interpretation of law was being followed, and on that note, students, I've claimed what, students? I claimed a wrong particular this thing. Or second case is a wrong classification of income. I have classified the income under the head house property, whereas I should have classified my income under the head PGBP. And by classifying the income under the house property on my own particular ground, which I believed it was correct, therefore I went on to classify the income under the house property. And not only that, I have also claimed like standard deduction of 30%. So these are the cases where we can say that now the assessing officer will rectify your error, and he will thereafter will pass the order in 143, and in which case he is going to classify the income under the head PGBP and no standard deduction would be allowed, and in which very case what has happened is just that your income got enhanced and there is an additional liability of tax. So these are the example of underreporting. The misreporting happens when something is done deliberately. And generally, those things which are done deliberately are those which are to do with the facts. Like, for example, a bogus claim of the deduction, wrong under or suppressing your sales, or over inflating your purchase, and thereby you're claiming what a particular wrong deduction. So these are the examples for a misreporting, wherein something which is done deliberately. Generally these deliberate acts are done on the factual part. On the legal law part, it's all about the interpretation. So therefore, if you believe that this interpretation of the law is correct and you went ahead and made a claim out of it, and thereafter it turned out in the order that this claim is not available to you, and hence the total income got enhanced, and so also was the tax liability. So you then cannot be held as a victim of it. But yes, there was a wrong claim because of which the income got underreported, and accordingly in that particular case the penalty would be at 50%. So these are the factual difference between the two on misreporting and the underreporting, as the case may be. Now discussing on this particular part, which is about the penalty in this case. Yes, Ritik. Discussing on this particular part, which is on the non-filing of the return of income. On the non-filing of the return of income, students, what happens is this, that when you have not filed the return of income at first place, when you have not filed the return of income, students, at the first place, in that particular case, what happens, students? In that particular case, students, what has happened is that not only that there would be a penalty for non-filing of the return of income. So the normal 234F penalty could be imposed. Plus there would be a consequence of the interest of 234A, 234B, and these interests will come into play. But more importantly, there could also be a prosecution for non-filing of your ROI. And the prosecution section, students, is under section 276CC. Now the prosecution section is divided into two parts, students. Just pay attention on this case. Other than a company and to a company. So a company makes a default of not filing of the return of income, then what is the consequence? Other than company, if they don't file the return of income, then what is the consequence? So the consequence for other than the company, let's read that one first. What the law says of 276CC, it says that the prosecution on non-filing of the return of income would be there in the case of a non-corporate assessee if the tax liability which is payable, please mark my word, the tax liability which is payable, how it is payable? Payable would be after giving the credit of advance tax and TDS. and TCS. So whatever is a tax liability, whatever is a tax liability payable, if it exceed rupees 10,000, if it exceed rupees 10,000, in that case only, that other than a company can be prosecuted. Other than a company can be prosecuted. Whereas in respect of a company SSC, students, even if the tax liability payable is zero, even if a tax liability payable is zero, still a company could be prosecuted. That is the provision of section 276CC. And on that ground, if you now see over here in this context, students, what happens over here? Messrs. M and Co., a proprietary concern of Mr. Manan, failed to furnish his return of income for AY 23-24 within the due date under section 139(1). The AO in turn lodged a complaint against the proprietor under 276CC. The tax payable on the assessed income as reduced by the TDS and advance tax was how much? Was 1,40,000. Mr. Manan filed an appeal before the CIT appeal against the order of assessment and got part relief. Accordingly, AO passed an order giving effect to the order of CIT appeals. The tax payable as per the said order of AO was 18,500. So after giving the effect, students, it is still 18,500 tax payable. So if it is payable at 18,500, then obviously we will say, students, what? That yes, it is still in excess of 10,000. So in that case, will that Mr. Manan, will he still be liable to be prosecuted? Answer is yes. The AO accepted the order of CIT appeal and did not prefer an appeal against the ITAT. Mrs. M and Co. seeks your advice on maintainability of prosecution. It is maintainable because the amount the amount of tax which is payable, it is still more than 10,000. Also briefly mention your answer be different if MN company is a private limited company. Then what I said to you, students, even if it is zero amount of tax payable, still a private company will be liable for prosecution. Come to the second question, students, in this case. X Limited, an Indian company, to expand its overseas sales or export, launched a massive advertisement campaign of its product. For the purpose of online advertisement, it utilized the service of MINC. A London-based company, and JINC. An Australian company. MINC. Has a permanent establishment in India, and the services are effectively connected to P in India. This is a simple question, students, in this case. Now, if you see further, students, in this context, JINC. Has no PE in India. During the previous year 22-23, X Limited paid 34 lakhs to MINC. And 20 lakhs to JINC. For such service. Discuss the tax implication, TDS implication of such payment and the receipt in the hands of X Limited, MINC. And JINC. Respectively. So students, if you see over here in this context, for the tax implication which is there so far as first SSC is concerned, who is the SSC? MINC. Now, in the case of MINC. Students, who has got a P in India? Who has got, students, the P in India? In that situation, and that is of the online advertisement, it utilizes services. So whether equalization levy, students, will it be applicable? Just let me know on that particular point. In the first case, when MINC. Family is utilizing, is providing the services, students, to X Limited of the online advertisement, please tell me one thing, whether equalization levy of 165 will it be applicable? Answer is no, because for applicability of equalization levy of 165, we say that the non-resident providing the online advertisement service should not have a P in India, whereas in the case here, MINC. Has got a P in India, and hence equalization levy of 165 is not applicable. Fine. Let's then go to the normal provision. If I go to the normal provision, students, in this case, what will happen then? In this particular case, students, what will happen in the normal set of provision would be that MINC. Because he has got a P in India, in this case, what will happen, students? This particular income, one question is there, sir, can it be considered as A royalty income? No, it is not a royalty income, because students, the moment you say a royalty income, it will then go under I already told you earlier also, students, if you can recall, that the moment you say it is a royalty income, then students, what happens? It will turn the table out of the equalization levy and it will take you to the normal income tax law if you say it is to be a royalty income, because both in 165 and 165A, the two equalization levy section, they already have said that if the consideration becomes a royalty or FTS, if the consideration becomes the royalty and FTS, then equalization levy of 165 or equalization levy of 165A is not applicable. So definitely, students, it is not a case of a royalty because it's a case of an online advertisement. So therefore, it is not a royalty in this case. Had it been, say for example, I am an e-commerce operator maintaining a web-based platform, and thereafter I am providing some, say, computer service, which the question which we have discussed earlier of a non-resident taxation, wherein this particular thing came out, and then we discussed that because it's a computer software service, therefore the payment in respect of that could be considered as a royalty under the Income Tax Act, although not a royalty as per the treaty. That is a different altogether. But under the Income Tax Act, that particular computer software service under the end user license agreement was considered to be a royalty under the act, though not under the treaty. That is our observation which has been there. But this is a case of an online advertisement. So definitely this is not a royalty income. So therefore it is not a royalty income. But whether for MINC dot, who is providing this service, having a PA in India, 165 equalization levy, will it be applicable? Answer is no. Because of the existence of the PA in India, no equalization levy of 165. So then what happens? It goes under the income tax law. Under the income tax law, in this case, don't think of royalty. We will think of the business connection. So existence of a P in India, will it give rise to a business connection? Answer is yes. And because it gives rise to a business connection in India, therefore the income to MINC dot primarily arising out of such business connection in India will be taxable in India. Will be taxable in India. Coming to the second one, which is JINC dot, who does not have a permanent establishment in India, students. JINC dot doesn't have a permanent establishment in India, and therefore in this case they are also providing the online advertisement service, and they don't have a P in India. So whether the equalization levy under section 165, will that be applicable? Answer is yes. Who is the one who is going to deduct the equalization levy? X Limited. The responsibility to deduct the equalization levy would be on X Limited. What would be the, what students would be the rate of equalization levy for 165? The rate of equalization levy for 165 would be 6%. 6% on what amount? 6% on the amount that has been paid, which is 20 lakhs. And you all know the threshold amount. If you remember, the threshold amount is rupees 1 lakh. Yes. So therefore, the threshold amount is rupees 1 lakh. And because the threshold amount, students, is rupees 1 lakh, accordingly, we can say that the equalization levy under section 165 would be applicable, and X Limited will have to deduct 6% of 20 lakhs. 6% of 20 lakhs comes to how much? It comes to 6% of 20 lakhs comes to 1.2 lakhs. So 1.2 lakhs of the equalization levy they have to deduct from the consideration of 20 lakhs, and that 1.2 lakhs they have to deposit it. By when they have to deposit it, students? For 165 equalization levy, the deposit would have to be done monthly, and they need to deposit it by 7th of next month. The deposit will have to be done monthly, and they have to deposit it by 7th of next month. That is the point that is there in this regard. That is the point, students, that is there in this regard. So students, this is how it goes in this context, and this is how, students, we will be looking into it in this regard. I hope that all of you are clear with this one. All of you are clear with this one, students. What about the income tax, students? Whether income tax, will it be applicable? If equalization levy under 165 is applicable, then whether income tax also would come into play? Answer is no. JINC dot will be exempt. Once the equalization levy has been deducted by X Limited, then JINC dot, who is a service provider, they will be exempt, Hitesh. And because they are exempt under the income tax, there is no TDS implication in this. There is no TDS implication in this. So this is what it is, students, so far as this particular question is concerned. And then let's come to question number 29. This is again a very good question. In fact, question 29 and question 30 are similar to each other. So you can do it one, and then that would be all. Let's do this particular part on question 30. I think question 30 is what? would be targeted in your examination in the form of an MCQ? This is a really good question. Let's do question number 30, students. Read it out, students. Question number 30. M tax rate would be, it's a foreign company. So because it's a foreign company, the tax rate would be 40%. It's a foreign company. On the profit that they have earned, the tax rate that would be applicable would be 40%. So now then, students, question number 30. So students, herein, it's all about the tax recovery provision. Beautiful question. So what it says in this regard, in this context, students, the tax assessment of Mr. Bimal was completed on 20th of December 2020 and the tax due was determined as 125 lakhs. The assessee has the following: 1. Bank FD with Canara Bank at 25 lakhs, and 2. Receivable from Sridhar and Company Limited 25 lakhs. He gifted a land to his son who's a major son, 38 years. 3 years ago, whose present market value is 22 lakhs. He gifted a diamond necklace to his son's wife, evidenced by a gift deed dated 5th of October 2016. He owns a residential apartment in London, acquired 13 years ago. What is the movable and immovable property that can be attached in this regard? Now, students, in this case, just like the clubbing provision that you all are aware, so those all could be attracted, and the property which has been transferred, where the clubbing provision is attracted, so those properties also can be attached for the purpose of recovery. So the clubbing provision, if you see over here, would get attracted only in respect of what he has transferred to son's wife, because the son is in this case is a major son, students. So what in the clubbing provision, there are three particular players to whom the asset, if transferred, the clubbing is attracted. Who are these three? One is the wife without adequate consideration, without an agreement to live apart. One is the son's wife, primarily, again the same consideration, without adequate consideration. And the third one, students, is the minor child, if that income is not attributable to minor's own skill and talent. These are the three cases. So therefore, those clubbing provision gets attracted in this case, and accordingly, now whenever there is a tax to be recovered, then not only that the assessee's own property could be attached, not only the assessee's own property that could be attached, but also what? Also the property that he has transferred to those particular person on whom the clubbing provision get attracted, those property also could be attached. And therefore, going by this particular proposition, students, the bank FD, receivables from Mr. Sridhar and Company, that is also debtor. So therefore, they will pass a garnishee order wherein all the receivers, all the debtors would be required to pay to the income tax department and not to the assessee. That kind of an order would be passed by the tax recovery officers, whereby now all the recoveries would be made to the tax department and not to the assessee. That is the second point. And as I told you, in this case, to the son's wife, whatever was transferred, even that now would be attached. Apart from that, students, he himself has got a residential property in London, so therefore even that could be attached. So therefore, finally, attachment would be of his bank FD, receivables from Sridhar and Company, residential apartment in London, and diamond necklace gifted to his son's wife. Land transfer to his son will not come into play, and hence the answer is 1, 2, 3, and 4. 1, 2, 3, and 4. So B is the correct answer. Student, this is in respect of a fee particular part. So in this particular context, this is just a fee, a procedural part. I'll just very quickly wrap it up this one. Advanced ruling question, fee particular part, how much has to be paid to obtain the ruling? So if the transaction value, students, if the transaction value is more than rupees 100 crores, in this case, students, so the fee that is going to be paid would be of rupees 5 lakhs. The fees that would be paid would be of rupees 5 lakhs in this particular context, students, in this case. Now, who is the applicant? That is very important. In the case of the advance ruling, the one who wants to obtain the ruling in advance, who is the applicant becomes very important. And the applicant, students, could be the non-resident himself, or if the applicant is the resident, if the applicant is the resident, then the resident can make an application in respect of the non-resident's liability in the transaction. What is the non-resident liability in the transaction? For that, the application can be made. And the third category of the person is the notified public sector undertaking. The notified public sector undertaking, these are three cases of the applicant who can file an application before the advanced ruling authority, and depending upon the transaction value for which the transaction value for which the application is made, that the fee is proposed. And as I told you, if the transaction value exceed rupees 100 crore, then in that case the fee would be 5 lakh rupees. In that context, if you see, T Process Limited, an Indian company, entered into a business agreement with GLLP UK in September 2021 for export of goods to various countries as directed by GLLP. The amount of transaction between T Process Private Limited and GLLP by way of sale of goods would be 100 crores spread over 3 financial years commencing from 1st of October 2021. The parties, both T and G, apprehend some ambiguity as regard the income chargeable to tax in the hands of GLLP in India and T Process Limited can what, friends? Sorry, this is 180 crores. Can T Process Limited seek advance ruling in relation to its tax liability arising in respect of its transaction with GLLP? If so, how much would be the fee to be paid to seek the advance ruling? So students, in this particular context, since it is the case of a joint venture which has been there, which has been targeted over here, accordingly, students, over here, point number C is the correct particular proposition, and that exactly how the things has to be looked upon. Now, students, what I will be dealing with this one, students, you can just read this two particular questions more of the advanced ruling particular part and this particular part. This particular part, students, you can just read it out, students. This particular questions which are being there over here. Now, students, primarily in my last leg of the revision lectures, which is also due herein, I will be doing in this case with you appeals, revision, topic appeals revision. Penalty is virtually done, but penalty still I will quickly wrap it up on certain provisions of penalty in this case, and double AR and DRC. These two things, double AR and DRC. So these are the last particular leg. I think I should not take more than 2 lectures for these two things should be wrapped up. 2 lectures, students, maximum, and we will be wrapping up this particular part. And then I will go to my final particular part, which is of the MAT alternate tax regime primary. So those are the 2-3 topics, and 1 lecture I have dedicated for clubbing house property, which I have told you earlier also, and that is what I'm going to touch upon. And last one session, you can take this as a revision session, whatever it be, on the all the key aspect of ICDS. One last session, students, I will be doing would be on the key aspect of the ICDS. Now, these particular session, students, which I'm proposing to do primarily are all the practical base. Apart from this, are only a practical base. So definitely the quickly I'm going to revise the theory for you, and couple of good questions we are going to solve it on these each of the topics which I have just mentioned to all of you, so that this would be wrapped up in this particular coming week, and that is the way it will be done and dealt in this regard. Timing, students, would be in the evening, which I've already have told you, 9 o'clock tomorrow, which will be meeting up. The Super 60 next particular part, which I'm going to have with all of you students, would be tomorrow in the morning. The Super 60 students, tomorrow morning, will now look into the next particular part, and the next particular part of the Super 60 students, which has been there after. Now what is left out in the Super 60, in this case after TDS and TCS? The initial part, students. Let us take up the initial part. The initial part, students. But I think the initial part, it would be better if I do with you, because these are all the practicals of alternate tax regime and all, and that will have a relevance if I do with you first the concept and then thereafter solving the question. That will be more relevant in this regard, in this context. Now, students, on the capital gains front, students, in this context, I should say that one amendment we have done it on the capital gains front, on the partnership assessment and the insurance. The same RTP question, students, I've already made the video. Please do ensure to go through that particular video on the partnership assessment. The sections are on partnership, and it is also on the insurance, partnership and the insurance. These are the two particular area, 45(1)(b) and 9(b) and 115(a). So these are the two particular part which has been there in this regard. So in this context, students, in this particular context, students, place and time of search. I'm not getting this place and time of search. Time of search, it could be any time. There is no place of, unlike for survey where the time is given, there is no time. Place of search also, there is no, any place can be searched. Unlike in the case of survey wherein there is a time and place of survey. For the search, absolutely there is no issue. There is no encumbrance on the place and time so far as search is concerned. So there is no encumbrance which is made in this regard. Okay. So students, in this context, therefore, I think we are, yeah, anytime it could be done. So in this context, students, only one segment, the practical particular part of this segment, students, which has been there herein, this comprehensive question on total income and tax liability, this is the part which I would want to do, because this will help to deal with the various revision aspect, and one question on tonnage taxation. This one question on tonnage taxation, students, this also I just, because this is a dangerous question. If it comes, it will really be backfiring on this particular part. So therefore, these two questions, students, I'm going to touch upon now in my subsequent class. Okay. So therefore, this is what would be there. But before I deal with this, students, I will be touching upon quickly the appeals and revision, the AAR and the DRC part. So that two is done. After these two is done, then thereafter, students, the MAT, after MAT and the alternate tax regime which are being there, and on that basis we will then try to solve those particular practical questions which are based on this particular area. Fine, students, I'll see you then in this context. Yeah, so tomorrow, students, we will meet up then in this particular case, not in the morning but in the evening, then in this regard at 9 p.m. In the 9 p.m, students, we are going to meet up one for appeals and revision. Quickly we'll wrap it up, those particular thing, and then final lecture would be on penalty, AAR and settlement commission, penalty, AAR and DRC. And then the next 2-3 days we will allot for, the next 2-3 days, friends, we are going to allot for what, the entire practical questions, the last particular leg of practical questions, clubbing of income, house property, and then thereafter this. So we'll do it effectively, don't worry. I'll just cover up all the particular base, but in practical manner, so that the practically is what has been captured and covered up, and this is what I'm going to touch upon. Fine, friends. Faceless, yeah, faceless also I'll just give some time. Faceless assessment also will give some time, although chances of faceless is less, but still I'll give us time on the faceless also, on the penalty lecture, last lecture. The faceless we'll touch upon, yes, we'll do that also.